To address the other story, because this is also something that the chief economic advisor spoke of. Today's developments, the group of ministers on the sugar cess met today, but it hasn't firmed up its view on the matter, and that is because there is severe opposition from states like West Bengal, Kerala, Punjab, etc. The panel will now meet again on the 20th of July, that is the GST Council, and the GST Council will take a call on whether to proceed with the sugar cess or not. Now, sources tell us that the group of ministers believes that the urgency of imposing a sugar cess has in fact reduced. In fact, the panel may consider a 1% cess on luxury goods instead to create a fund to tackle agricultural distress. Now, remember, this is coming on a day when the outgoing chief economic advisor, Arvind Subramanian, has called for a simpler GST and direct tax structure. In fact, he says that let's not argue about one rate for the GST because that is not viable or a realistic expectation, but let's talk about a three-rate GST structure. He's also talking about direct taxes, where he believes that a lot more needs to be done, both in terms of bringing down the rates and simplification. Let's listen in.
Fewer rates, a wider base, fewer exemptions. I think those principles are absolutely, I think fundamental in that. And I think on the GST, therefore, it's kind of a work in progress on that. I think we need to simplify that a little bit more. On the direct tax side, I think we are, Arvind Modi is heading a committee where, again, I hope some of these principles will be adopted, where we have much simpler tax structures, and that's one. The second principle, I would, and this kind of relates, and maybe we can come back to that, I do think that, for example, when you have fiscal targets, I think this having targets and having to meet them, I think it's something that does give rise to perverse incentives, and I think that's something that I think we need to watch out for. You see, but the third principle I would say is essentially, which I laid out, is really try and use more incentives rather than punitive actions to this. The problem, of course, is that when you have stigmatized capitalism, right? When you have stigmatized capitalism, you in a sense almost have to go overboard in order to establish the legitimacy of the state, to say, look, we are even holier or better than that in going after the bad guys, right? I think that's just the legacy of stigmatized capitalism, and I don't know whether in doing that, how you can actually minimize the collateral benefit in that. I think minimize damage is going to be very difficult.